And it's not so much because of portfolio flows. We know that there is no net foreign buying in the stock market, no? So that's a proxy to, of course, also foreign direct investments, which did not improve either in 2020. Naturally, kasi merong pandemic, no? So wag na nating wag nating uh, biruin yung mga tao na yun ang dahilan. The real reason is imports collapsed, no? Substantially. Single month in April, it fell 65%. 30% na lang natira, no? 30-35% na lang natira ng dating ini-import natin.
Now, translating to higher US interest rates means the dollar could bottom out. Remember, last year, the dollar was practically close to dead. Now, we're seeing signs of activity. No? So that activity can bring because of the higher oil price, demand for dollars will also rise. Second, you have hopefully, with the reopening of the economy, we'll be able to have the importations come back. So that will be good for the economy. So that will at least create the demand to bring us back to 49 to 49.70. So moving forward, first half could be well challenged by rising inflationary pressure. So it's a low base. Second, you still have transitory pressures coming from the fourth quarter, which is the impact on meat prices, on ASF, the typhoons, which affected vegetable and crops. So that should at least put inflation on the high side in the first half. So I'm looking at close to 4% inflation for 2021.
We've seen the peso strengthen on the backs of the US dollar dipping below 50, and pretty much now what we have been pointing out is imports. We have not been importing enough, and economic activity is relatively slower. That's why the dollar is weaker. Given that the economy is starting to open up again, and the assumption is people will be importing once again more than what we did the first half of 2020. How do you see this playing out for the peso against the dollar?
Yeah, well, Marvin, just for perspective, the dollar was actually weaker against not only Asian currencies but the majors, no? So it was really down against most other currencies in 2020. And this is because of the aggressive monetary policy of the United States, the Federal Reserve, no? Against the majors, parang almost 9% or more than 9% yung decline ng dollar, no? Against the peso, it was only about 5.4% for the whole of 2020. So the peso was, just like all the other currencies in the world, strengthened against the dollar. Pero there's something special about the peso. I think if you look at Asia, the likes of Korea and Taiwan, I think, the Chinese yuan strengthened more than the peso. No? But if you look at the ASEAN, the peso is the strongest. No? And people are wondering, tama ka, why is the peso strengthening at the time that the Philippines is trailing the recovery, is trailing behind the recovery, is falling behind the recovery? And you're right, the reason is the demand disappeared. Whereas we would usually import about $112 billion. So in 2018 and 2017, 2019 and 2018, back-to-back years, 112 billion ang imports natin. This year, it will only be a little bit above 80 billion. So you can just imagine, no? 30 billion disappearing, demand disappearing. And then remittances, resilient. No? We thought remittances will fall anywhere between 5 to 10%. Pero mukhang drop lang this year is 1 to 2%. So those two key factors led to the strengthening of the peso. And it's not so much because of portfolio flows. We know that there is no net foreign buying in the stock market. No? So that's a proxy to, of course, also foreign direct investments, which did not improve either in 2020. Naturally kasi merong pandemic. So wag na nating biruin yung mga tao na yun ang dahilan. The real reason is imports collapsed substantially. Single month in April, it fell 65%. 30% na lang natira, no? 30-35% na lang natira ng dating ini-import natin. So you can just imagine how much relief that is for supply of dollars for us. Kaya lumakas din yung peso.
Correct me if I'm wrong, what we import a lot no is machinery, heavy machinery, and because you could correct me if I'm wrong, but what we normally import is a lot of heavy machinery. That's a big chunk of what we import, and because everything was in a standstill, that got impacted the most also.
You can just imagine Cebu Pacific, PAL, did not buy any airplanes last year. Diba kasi wala eh. Other forms of businesses, manufacturing, they don't need to build up capacity because demand softened. Diba? So, yun yung void. No? Both consumer and capital spending related imports disappeared. And then oil prices fell pa. Bagsak na yung volume, bagsak pa yung presyo. So, ang laki talaga ng nawalang import demand.
Got it.
Yeah, and it's not because we will be the first to recover. Hindi eh. Yeah, unfortunately hindi. As much as we want that to happen.
Well, that's actually a good question. So, I guess one of the things that short-term rates will remain low, but probably on the longer end, we might see some adjustments. No? One thing that has happened in the U.S. is that the 10-year rate, which is a important benchmark, no? Eventually has gone up by 25 basis points. So for a 25 basis points increase, coming from a 0.9 to a present level of around, the present level now is around 115. So that's a fairly big increase in terms of volatility for the 10-year US Treasuries. So it can come to a warning. One is that with the Biden blue wave, that has eventually got off in the US, he brings in a lot of potential stimulus in their economy. So more of infrastructure spending, very similar to what we're doing in the Philippines. Now, that will mean higher deficits and higher government borrowings too. So that's why we've seen the rates pick up. And it could also be inflationary as vaccinations are happening in the US. The tendency is people will normalize their lives. As they normalize, they will go back to the same old things that they do. So they'll start spending, they'll start going out. So demand for oil is also rising. And this is not just in the US. The likes of China, the likes of India, they're slowly normalizing their lives. So that can create a wind on higher interest rates outlook in the US. So there could be some adjustments on the long end in the Philippines. Now, translating to higher US interest rates means the dollar could bottom out. Remember, last year, the dollar was practically close to dead. Now, we're seeing signs of activity. No? So that activity can bring because of the higher oil price, demand for dollars will also rise. Second, you have hopefully with the reopening of the economy, we'll be able to have the importations come back. So that will be good for the economy. So that will at least create the demand to bring us back to 49 to 49.70. So the best case is 49. The best case is 49.70.
I know you are a very, very big fan of using technical analysis. Looking at it, if a breakout from 49 plus happens, how far do you think it will extend also from a technical point of view?
Well, I think that the more critical resistance is 50. So anything above 50 will at least bring it back to 52.
Got it.
But it will take time. No? Parang right now, coming from 48 to 50, there's a lot of challenges because we haven't really reopened the economy. So there's no demand for importations. So it's only now that we're seeing probably the higher interest rates will eventually attract investors back to the dollar. That's why if rates started to rise continuously in the US, then it begs to reassess your investment in equities. No? A lot of technicians have already called for a top in the US, including myself. But if rates continue to rise, this could be an opportunity to rethink that view, mainly because it will now give you a much better sense of rethinking bond investments because of the higher rates. No? So baka magkaroon ka ng profit taking.
Got it. You mentioned a bit about your base case for the GDP. Can you give us a deeper sense on where the economy will be and what will be the biggest drivers for it, given your assumptions on the GDP as well?
Okay, well, in terms of GDP, I guess it really is more on the government spending. So the government spending is very particular. So once we're able to see the government spending really moving on, then most likely the tendency is you will see that accelerated spending, and then eventually will flow through in jobs, then eventually consumption will pick up. Now, the key factor that we should be watching out for is the absorptive capacity. So absorptive capacity is very important. And this is over the past few years, we've seen that it takes time for government to really move. So that's the challenge. No? The second, of course, is the pandemic. So those two are the key factors to watch. So that if we further reopen faster than, well, initially we were expecting that January we will be modified GCQ, no? But the president extended the GCQ to January. Diba? So we don't know if by February we will probably see much less stringent community quarantine. So that is another factor to be that will determine the shifting from a base case to the best case. Right now, we're just keeping the base case there, no? So the third, of course, is how we become confident as individuals and business. So that's the key.
Got it. And it's quite evident that more people are, I think, learning to live about this virus already, as compared to 6 months ago where people were scared and not leaving their houses also.
Yeah, again, I want to put things in context, Marvin, kasi some people are saying napaka-optimistic naman ng BPI. They're looking at 7% growth for 2021. Mas malakas pa sa 2019 growth. But you have to remember, the assumption there is the decline for 2020 will be double digit or close to double digit. So by 2022 pa tayo makakabalik sa 2019.
Wow.
And that's not very encouraging in a sense because the US, China, Vietnam, some parts of Europe will already be able to return to 2019 output this year. Tayo, 2022 pa. And again, hopefully no new virus, no new infections or rise in infections will happen. Hanggang 2022 na lang, baka madelay pa to 2023 if something wrong happens again. No? But it doesn't look like we will be able to go back to 2019 yet this year. 7% versus minus 10, clearly from a mathematical arithmetic perspective, will not be able to bring us back to 2019 output yet. But still, I mean, if you will see headline numbers in the second quarter of 2021 of 12% growth or 14% growth year on year, that's very good for the market, diba? It's very encouraging to see that we're growing double digit and taking back some of what we lost back in 2020. So headline numbers like 12 or 10 in the fourth quarter of 2021, I think helps keep the confidence going. No? Still, I think, I mean, Jonas is better in this respect, valuations, and I'm not really a pure stock market analyst, just an economist. And at this point, mukhang the earnings still do not justify the prices. It's just the liquidity is keeping the valuations, the prices up. And it's consistent with the growth numbers that we're assuming of 7% growth this year and maybe 5 to 6% in 2022.
And I think the difference about the stock market with the economy is it's really forward looking. Anything that anticipates opening up, growth, or recovery, people buy even if the numbers are not supported yet.
So your PE will look too high.
Yeah.
But you're anticipating 2022 recovery already, so it makes sense. You're right.
And what's interesting there is if somewhere in 2021 the results are bad, then we will see the market go down already because it did not meet expectations. Or if it's something that did better than expectations, I think it could continue whatever movement is there. Yep.
Agree.
Given the GDP, how do you see at least the PSEI or the market as a whole going for the year, given where we are as an economy? Considering that you mentioned valuations, we are higher already right now compared to our peers also.
Well, I think I already heard Jonas say that the target of BDO is 8,000. I mean, we're a little bit less optimistic, but nevertheless, we see a lot of opportunities in some sectors. I can't discuss that in detail. I think our securities arm knows that much better.
Got it.
But we're looking at this area of 7.5, 7.8 only.
Got it.
That's what I remember, if I remember it right. So a little less optimistic, but there will be fluctuations that will give you opportunities to get in at a good time. So that if it settles at this level by year end, it doesn't mean that you don't make money from the market. I think it's actually still a good time to take a look at equities, and if you can time it well, especially if you're a long-term investor, you don't even have to worry about what's going to happen this year and hold on to it for some time.
Yeah, true. And especially for those watching this that are in their 20s and in their 30s, it should be a good time for planting. Because you would not remember what happened today 20, 30 years down the line, whatever fluctuations happened, but you would remember I think it's about building a base for those that are really, really good companies. Those that that 10, 15, 20 years, or if you're at least buying the index, building a base right now will heavily benefit you 10, 15, 20 years into the future, especially if you have a job or you have a business na yun naman talaga yung main source mo. You just want an alternative asset that could protect you. So very, very well said right there.
In my posts and in my TV interviews, I've highlighted 7,300 as a key level. So the key level eventually highlights close to full valuation based on an earnings recovery of at least 50% for 2021. So this is where we are right now. So if the economy further reopens, we're able to manage the pandemic well, sort of live with the virus between now and the vaccine timelines, then that should at least give us a base case of 7.6. On the best case, 8,000. Okay. So recently we tested the lows, below 7,000. So unless we go below 6-7, that's the time to probably create a reassessment of the situation.
Given that the margins from where we are right now to the possibility of where we could end up in 2021 is medyo hindi na siya ganun kalaki, should people be more cautious right now also in terms of it and wait for better results to see na when things get better, there's a possibility that better earnings will also result from that?
Well, basically, I guess you have to be more selective in terms of your stock selection. So I guess from the last time we had an interview, we were talking about companies that were in the telco and consumer. So these are basically when we were more on a stricter lockdown. Now that we're slowly further reopening the economy, then the tendency is we should be looking at sectors that we used to love prior to pre-COVID, which means we're going back to retail, we're going back to infrastructure, we're going to go to property, because we're slowly normalizing. So most likely they will be the ones to pick up should the market rally, mainly because we're slowly normalizing back. So basically the key idea of the view is we're steering towards recovery. So from the storm, we're slowly now moving into port. So we're seeing clear skies by then. So things should normalize.
You mentioned a bit about government spending earlier. I'm just curious on your insights on how build will be, especially that we're just a few months before the next election, and then your sense on Pogos, given that we've seen an exodus over the past 6 months.
Well, I guess answer first the Pogos. The Pogos, yes, there were a few that left, but there's still a portion that remained. So that's why your property prices just slightly went lower, but sort of sideways, no? Rather than go down. So I guess once the economy further reopens, then we could see as a resurgence of the sector as well.
Mm-hmm.
Now, when it comes to the question about the elections, no, you need to understand that the 2021 budget was passed quite early, and eventually the extension of the 2020 budget. So it's no longer build, it's build back better to what the government is saying. But the focus basically is build infrastructure, which is basically not just the infrastructure that we need to play catch up, but also in health and education infrastructures. So to be able to manage the pandemic and eventually adjust the how we react or how do we play the education role. So we need to build a better education infrastructure. So these are the three that the government is eventually positioning for, at the same time moving into digitalization. So the president highlighted that they wanted to have governments that are on the digital space and eventually online services. So really, the key to government spending in 2021 is all about BDO, no? Build infrastructure. Then you have eventually the digitalized government services and eventually working online.
Well, we're not sure exactly why the Pogos left kasi, I mean, of course, the pandemic is the number one reason, but I suppose I thought that they were actually going to stay because they have a chance to avoid the way they run their business allows them to somehow manage the protocols, no? But I'm not too worried because there are many other sectors that we can allocate resources to that will help make up for the loss there. No? I think maybe in the condominium space, because they bought a lot of condominiums and they were paying in cash in advance, that led to rapid increases in condominium prices over the last 3 to 4 years. That will probably slow down a bit, maybe even reverse slightly. But in terms of the economic losses with the exit of Pogos, I don't think it's a significant loss over a medium-term perspective, Marvin. More so that the pandemic taught us that we should really be shifting to other areas, no, learning to maybe scale up so that our BPOs move towards knowledge process, no, yung areas that are actually of higher value added. We have a lot of time. Kids now should actually spend more time learning the skills that are needed by this better normal of what we call it better normal in the Ayala group. No? And Ayala's investing a lot in strengthening the capacities of their new ventures in these areas, no, that will require knowledge and the digital space in particular, Marvin. So not too worried about Pogos. BPOs, I think they've held their ground. I think the decline in outsourcing revenues are not very alarming. Single digit only compared to the economy's double digit decline. They're actually doing pretty well because again, there is a way to follow the protocols well. No? Once in a while, you will hear a rooster in the microphone kasi malapit sa bahay ng voice outsourcing yung manok, no, maririnig mo. Those are some setbacks, but they are able to find a way around it para makapagpatuloy ang outsourcing sector. So we're very hopeful there. And again, AI we think is a threat, but it's a slow burn. It's not going to be happening very quickly, we will still need people in many things. No? We thought that the tellers will disappear when the ATMs were invented. In the same way, AI will probably replace some jobs, but not completely. So again, we think that those sectors will more than compensate for the loss of POGOs, especially in the property sector.
Yeah, and when you're talking about AI, I remember that, guys. You can research on this. No, my style in investing is, I try to see where things are, then I just try to invest in it. So when you're talking about AI, I kept researching on who are the chip manufacturers that are heavily into AI, because if AI becomes a very very large part of society later on, for sure they will need the underlying technology for it to happen also. But thank you for sharing that on the front of Pogos, and at least also for how it integrates with the BPO industry.
Many of the developers are making the necessary adjustments, no, on where the developments should go. No? So it doesn't mean though that condominium demand will fall. It's just that maybe the expectation in the past will be a little bit off track.